Hey, welcome back. Let's start with Korea Development Bank. KDB, the country's main state-owned policy lender. Its 2025 annual report has some numbers that are getting attention in the financial sector. Loan write-offs, debt the bank declared unrecoverable and removed from its books, jumped to 837.6 billion won last year. That's a 229% increase from 254.4 billion won in 2024. The problem is that KDB's total loans actually grew over the same period, rising about 1.5% to 197.4 trillion won. Yet net income still fell by 292 billion won. Growing assets with shrinking earnings is usually a sign of deteriorating credit quality. The non-performing loan ratio rose to 0.78% at year-end, reversing improvements made in 2024. The loan loss reserve coverage ratio dropped 35.84 percentage points to 239.59%, meaning the buffer against future defaults is shrinking. For context, IBK, which focuses on small and medium businesses that statistically default at much higher rates, actually improved its NPL ratio over the same period. KDB deals mostly with large corporates, which default at a fraction of the rate. Analysts say the divergence raises questions about how tightly KDB is managing credit risk. On a different note, Seoul Gumgo, Korea's network of community cooperatives, launched its fourth annual newborn savings account, the Georeumma series. The rates are notably high: 10% for a first child, 11% for a second, and 12% for a third child, or any baby born in a population decline region. Monthly contributions are capped at 300,000 won with a one-year term. Within about a week of launch, 4,870 of the 50,000 available accounts had already been opened. For reference, the national average maximum rate for a one-year savings account across 19 Korean banks is 3.56%. Woori Bank announced the seventh cohort of its Rising Leaders 300 program, run jointly with the Ministry of Trade. 35 mid-sized companies in sectors like semiconductors and biotech were selected, each eligible for up to 30 billion won in loans at rates up to 1 percentage point below market. Since 2023, the program has deployed about 1.8 trillion won across 190 companies. And finally, the National Tax Service has launched a tender to outsource custody of its seized cryptocurrency to private firms. The government currently holds about 78 billion won in confiscated crypto, previously stored in local tax office vaults. After a reported mnemonic code leak exposed serious security vulnerabilities, the agency is moving toward institutional cold wallet storage with full audit trails. Public comments close April 21st, with a pilot running through year-end. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.